Hi everyone. Today markets did rally super aggressively, but then we hit that 55 EMA here on the hourly chart and then began to sell here into the end of the session and into the after hours, and we can see volume on that selling. Not super great. Let's take a look at this chart and some of the others and see if we can find some levels to work with for the next session. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Moving over to fear and greed, stepped up to a 28 from a 22. Again, we said 22 was very, very low. We thought we might see a little bit of a bounce, and we did. Regular fear on momentum, still strength and breadth, sitting in extreme fear, and you can see breadth continuing to crater here beyond these lower levels here. We'll take a look at that later. Very, very weak there. Put call ratio continuing to rally a little bit, as you would expect. Volatility pulling back, again, makes sense. Safe haven demand, back into regular fear. Junk bonds, regular fear here as well. And then looking at the economic calendar here, you can see PCE data came in quite light, and this is probably part of why we saw markets rally so aggressively. This could be a catalyst for the Fed to start cutting rates maybe a little bit more aggressively. Maybe we see 3 cuts next year instead of just 2. I don't really see that happening off of one data point, but it did come in pretty light. The expectation was for it to step up a little bit, and it came in line on the year-over-year numbers. Still a slight step up on the headline numbers versus the 2.3 here to 2.4, but you can see month over month, 0.1 versus 0.2 versus the 0.2 previous, and then same here for the core month over month, 0.1 versus 0.2, previous was 0.3. So all of this data better than expectations on the inflation front, and you can see Michigan data also better than expectations there. Consumer expectations better. Atlanta Fed GDP, a little bit worse than expectations, but not terrible. Moving over to Max Pain, we ended up getting a much stronger finish here. Stock price 590, 598 was Max Pain after we got the adjustment on options. 4.6 million, put call ratio spiking there makes sense why we saw that rally coming through. 580, 585, we said were put walls, and we ended up rallying towards those call walls here. Couldn't quite get above the 595 area, so that makes sense. I think we touched that area and then pulled back a little bit, so 590 made sense, and that was actually more in line with yesterday's Max Pain. So we'll see if this continues to matter over the next couple of weeks. Probably not going to matter until the January options expiration. Moving over to the charts, looking at the S&Ps here, I just wanted to highlight, I did make some adjustments here to the SPX. You can see these trends. Touched that lowest trend here today, caught a bounce there. Momentum stepping up, big volume on the SPX as well to the upside, interesting. Hitting the midpoint on the trend and then selling off a little bit from there, well below the 21 and the 9 EMAs. You can also see we got the cross there on those trends, 9 below VWAP and the 21 EMA. That would be your overhead resistance now in that 6,000 area. And it does make sense. We found a little bit of bounce here, volume profile here, tested these levels. Still have the gap fill for the SPX back to that 5 November area, so plenty of room. And then you can see it here on my SPY charts. Touch that level, overthrew it a little bit. Trends are just a little bit different on the SPY, but not a whole lot. Volume not as strong. Also getting into this range, selling off, still seeing that cross on the charts there. And then looking at the levels here, you can see we came into that 579.78 level on the pre-market price action, rallied up, hit that 55 EMA, and then sold, selling a little bit more after hours. We're right on VWAP, right on the 9 EMA. Momentum selling here on the hourly, and then that volume coming through on that selling candle. At the very least, I would expect this to pull back here to the 586.80 area, retest the 21 EMA, retest the level here, 585.91. If it holds that level, then you could look for continuations. You have a bit of a mixed day, right? So you have the low, lower, low, and then you have the high, higher, high, right? So you have consolidation in here, waiting to see what happens. Again, I'm expecting a little bit more pullback, not much, based on today's price action. Then we'll see what happens here Monday. And then do we get the rally into here? Or do we break back down into a lower low back here into that 474 area and look for that gap fill that we talked about, which takes you to that 474.71 level. And then looking at the Tasty charts here for the SPY, you can see we overthrew that lowest band as we expected. We hit that target, rallied all the way up to the upper band, and then sold off from there. And you're actually in bullish conditions now on the hourly chart. Still bearish on the daily, of course, but now this is saying we have mixed signals, so that should give you a little bit of sideways choppy action. Once they start to realign, then we can look for some clear direction. But for now, bullish on the hourly, bearish on the daily, so sideways choppy action is the expectation until we get them to realign. Moving over to the NASDAQ, you can see we did pull back right to that 21, right to that VWAP level. We don't have the cross here yet on the NASDAQ. It continues to look a little bit more bullish here, but I did add this structure. Obviously, it's a very loose framework for now off of some of these key levels here, off of the most recent high. And you can see that it did actually become important here on that pullback to the midline. We'll look at that on the hourly, but watching this structure here, this is how structures start. Pretty bare bones, touch these levels, and then we'll see if price will respect that over the next couple of weeks or not. Just something I'm watching. We'll see if it validates or not. If we get the test here, resell off into the lower ranges back into the 508 area. We did get the gap fill back here to the 29 November candle, so you don't have the same gaps there. None of these gaps are left. You could argue the gap here from 5 November, I guess that one still exists back at 492. Are we going to get that gap fill? That would be interesting. And if we did get into that level, then you would certainly expect lower lows to come. That would be a clear change of structure. But for now, watching this structure here, and then looking at that hourly chart, just so you can see that trend line. This trend line here is that midline right here. So we came in, overthrew it, hit the 200, makes sense. Broke down, retested, and then sold off after hours into the end of the session, and then after hours, momentum bearish, huge volume on that last candle, big selling there. So everything says this should go a little bit lower, and this is a clear test of the midline, clear rejection from there. Looks like this should head back into the 512 area. And then we'll see what happens. Is it going to respect the trend? Is it going to break through there? Obviously, it's a news structure, waiting to see if it validates. And then similarly here for the SPY charts on the NASDAQ, you can see bullish conditions on the hourly, hit those upper trend lines, sold off, back into the mid-range, back below the 8, back below almost all of the EMAs, except for that 21 sitting in there, which is pretty much at the midline. Not huge volume. The big volume on the day came on the up candle. Actually, that last up candle at the critical turn point. So maybe that was the selling action that allowed this to sell a little bit more into the end of the session. Again, sideways choppy action for me. Unless this sells back, takes out these ATR bands, which are currently at 509.95, back to the lowest band there at 505, then that would be bearish conditions, and then we would be back into alignment with the daily chart. Moving over to the Russell and the Dow, both of these managed to stay positive as well, 0.94 and 1.24%. Tested some levels, tested these areas here, and then sold off back just barely above the level, 221.49. Momentum still bearish, RSI turning up a little bit. Makes sense, we were definitely extended. Talked about a potential bounce yesterday, and we ended up getting that bounce here. And I also said yesterday I am expecting these rallies to be met with sellers and a lower high setup, and I do still think that that is valid. Doesn't mean you can't rally up even into the 229 area, hit these key areas, hit these trends, and then sell from there. That wouldn't be super surprising, but we did hit the 144 EMA and caught a bounce from there. So short term, I could see trading a little bit bullish, but definitely take a look at the end of the session on the short time frames. Pretty much across the board was pretty bearish. Moving over to the Mag 7, interesting to see the Mag 7 actually going negative on the day, 0.54 to the downside. Momentum still bearish, RSI still bearish, volume ramping on that selling action. Tried to stay positive, hit these key levels, and then sold. So that is another bearish indicator, 3 in a row there. Hit the 21, tried to rally, and then sold some more. I'm still expecting this to sell some more here over the next couple days. Moving over to Apple and Microsoft. Apple absolutely holding up markets here today, 1.88% to the upside. Massive move there, resuming bullish momentum, huge volume coming through on Apple. Almost makes me wonder if there was some kind of announcement that I wasn't tracking, but huge move, 1.88%, seeing 125 million shares traded, double the previous volume. Interesting there. Microsoft basically flat on the day, down about 0.1%. Again, huge volume coming through there. And that ended up being a downward momentum candle, selling action, selling after hours. Moving over to Tesla and NVDA. Tesla down 3.46%, headed towards that 414.50 level. Barely pulled back really after this very strong move there. VWAP sitting at 313.53. That's a long way from here, but it seems like it could sell a little bit more. Momentum bearish, RSI bearish. And then you got NVIDIA up 3%. We talked about how NVIDIA was starting to hold a little bit of a base in here. Through wick, tried to bounce, rejected, inside candle. Inside candle is a reversal candle. We ended up getting the reversal to the bull side there. Now this is probably headed to the 21 EMA at 137.53. We'll see what happens once we hit these key levels. Technically, this is a downtrend. So you have 9, 21, 55, all stacked on top of each other, VWAP in there as well. But you're still holding support at the 144 EMA. So Once this breaks and we start to see this kind of downtrend, that would be interesting towards that 200, sitting at 116.38. But for now, short term, looks like you could get about a 1 to 2% move, maybe a little more, a 3% move somewhere into here. Maybe hit the 55 at 138 and then my level 140.76. So short term, looks like a base, look for a small rally. Moving over to staples and discretionaries. Staples actually outperforming here, 0.35 to the upside after hitting the trend and bouncing from there. Closed above 79.90 after closing below it yesterday. Maybe we're starting to see a little bit of a bounce here. Staples, probably a little bit better place to be than the rest of markets, at least in the short term. And then looking at discretionaries, 0.25 to the upside. Did overthrow to a new low. Did bounce back above the 21. Momentum and RSI are still bearish. Closed at the middle of the candle, very little changed on the day. You still got some gaps back here on this rally. Obviously, it was a very powerful rally. Honestly, you got gaps all the way here to 21 November, gap. So we'll see if any of those start to get filled over the next coming weeks. I would suspect that they do. Quick look at 200-day breadth from yesterday. I forgot to mention it, but this continues to go lower here towards that 52 level. We'll see how it plays out for the Friday session when we talk about it in the Sunday video, but for now, continues to sell almost below the 50 line, momentum bearish, super oversold at a 17.99, but market breadth cratering. And this is another indicator here telling me that even if we get a buy up, I would expect a lower high continuation lower in markets because the breadth is just not going to be supporting any rallies, in my opinion, at this point. Moving over to the dollar. Dollar actually went negative today, even after the very strong reaction out of the FOMC and follow-on days. Pulled back below 108 after hitting the trends here. You can see that here on the hourly chart. Rallied up into the Thursday, pulled back into the Friday, pretty much all session, and then rallying a little bit here at the end of the session. Maybe that's what's driving markets lower into the end of the session, but I would still expect the dollar to be bullish here, especially testing these levels here, testing them here. We had a very shallow pullback, rallied to a new relative high. So we'll see. Needs to close above 108, so we might see a little bit of a dip here, pull back. Once we get that close, look for 109.5, but for now, it is slightly below it, so maybe we see short-term dip towards that 9, maybe even the 21 down at 106.7. Then moving over to the VIX, obviously a big down day there as well, 23.8, momentum turning down, RSI turning down, right back into that 18.5 area, touch these wicks, touch these highs here and the trends there. With the big step down, it's still holding support. Maybe it does pull back into here, 15.5, but either way, I would expect a higher low here and then a bigger push higher, but maybe that's just my bias talking at this point. I am expecting markets to go lower, so I am expecting the VIX to spike at some point. Again, short term, looks a little bearish. I would expect the higher low continuation higher. Moving over to my accounts, it says I made a little bit of money, but I ended up down on the day. Not too bad considering I was bearish going into the session and markets rallied super aggressively, but either way, relatively flat, kind of frustrating considering that markets were pretty positive on the day, and most of that was during the session. So again, a little frustrating, but overall not too bad. In terms of positions, I do have two very shallow short positions at 530, 523 and 524 for small credit, just $1.27 on that for the Monday session. Again, I have a bearish bias, but we did see the super aggressive rally. We hit key resistance levels and then started to sell off. So I am expecting more sells from there, but you do have to respect the bullish condition on the hourly chart, the very powerful rally that we saw off of support. So want to be cautious on that short position. If we start to see sells, obviously I will add to my position as we head into the Christmas trading week. Let me know down in the comment section what you thought of markets today. What did you think of that reversal? Are we going to see follow through to the upside, or is the FOMC going to establish a low and look for that lower low off of that? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading. Have a great day.